Please welcome Martin El-Khouri.
Hi, everyone. Yeah, fantastic. I mean, seeing so many people in the midst of a what is called bear market environment, actually looking at blockchain and crypto and Web3 is fantastic. My name is Martin. I am leading our new initiative on Web3, which is called B3-THE HUB at Bertelsmann Investments. And I would like to speak a bit about why Web3 is actually something that you can very good understand by using venture capital. And of course, I'll share some information about what we do with the hub, but I would like to kind of provide a definition on what Web3 actually is from our perspective and why it is relevant. But before doing that, and I need to read this, I would like to cite a newspaper article from the year 2000 published by the Daily Mail. And I think it's actually quite funny. This article goes like something like this. It's about the internet maybe being just a passing fad, as millions of people that was around the year of 2000 are giving up on it. And what this article is saying is that research has found that millions were turning their backs on the World Wide Web, frustrated by its limitations and unwilling to pay high access charges. They say that email, far from replacing other forms of communication, is adding to an overload of information. And experts say that any predictions that the internet would revolutionize the way society works have proved widely inaccurate. I think 23 years later, we can say that this newspaper article has actually proved quite inaccurate. And we all know, I mean, sitting here, interacting with each other, exchanging information, the way we are meeting new people, the way we are dating, literally everything is built on this new internet infrastructure. And so what we can say, I would say quite confidently, is that any changes to this internet infrastructure is actually quite relevant to how business is conducted in the digital realm. And when we speak about Web3 as basically a large media group and also as a corporate VC, then what we're talking about is really a new internet infrastructure that is being built. It's the next evolution, the next iteration of the internet. And I don't want to kind of go back and kind of start from Web 1 to Web 3 and what has changed and what not, but just to very briefly summarize it, the early internet basically democratized information. You were able to kind of look for home pages, consume information, but there was no tool of interaction. There was basically just a pool of information that was accessible to everyone. That is like kind of the first iteration. And then technology has done a lot of things, right? We had new programming languages. We had JavaScript, for instance. We had new types of devices like this one that allowed us to kind of consume this information in an entirely different way. And that is basically Web 2. Web 2 is the possibility to exchange information with each other interactively on platforms. Now, if we kind of bring it down to the essence, the way business models in the internet are monetized still is very simple. We use platforms. These platforms take our data. They sell our data to advertisers. The advertisers provide advertisement that we want or don't want to see. And this is how money is actually exchanged, or kind of how value is added to our own individual data, to the way we're interacting in this digital realm. Now, basically what Web3 does is very, very simple. It's based on blockchain technology, and blockchain technology solves only one problem. It solves the digital double spend problem without the need for an intermediary. So if I would like to send someone value or money, I don't need a bank to kind of stamp my transaction. I can have this entire settlement layer automatically, right? So this is why we're saying that basically Web3, with all its different capabilities and technical specifications, is actually a new infrastructure to the internet that introduces the concept of value. And this is something entirely new that has not existed before. Now, why am I always saying it's an infrastructure layer? The reason for that is, and this is where kind of venture capital and then also to some extent corporate strategy comes into play. If we look at different verticals, they exist regardless of technological infrastructures, at least many of them. Let's take music, for example. Music has been produced with or without the internet. Music has been recorded, it has been distributed, it has been sold, right? And then it's consumed. But what changes is not what is being done on many occasions. For traditional business models, the how changes. And this is something that is extremely relevant, and this is where I think venture capital can provide a very, very helpful way to understand the details of this how. And this is why VC is actually a very, very good tool to expose yourselves to new types of business models in existing verticals that are plugging into this new digital infrastructure. Now, some numbers. We always say, and I like this comparison between kind of the early internet and the internet we're seeing now, because it's so fundamental in fundamentally changing what is possible, that it might be actually worthwhile to see how the numbers have been back in the days. And what we see, first of all, on the left-hand side, is a chart that is kind of showing the total number of internet users back in the early 90s, mapped to the total numbers of Web3 and crypto users. And what we've seen for a very long time, I think the curve is flattening now a bit, but adoption is actually following exactly the same pattern as in the early 1990s. So back in the days when this article that I just cited was published, there were many people who actually doubted that this whole thing was going to be actually relevant. We saw that usage actually continued to pick up. And this is one kind of proof point where you can say, if this adoption continues in this pattern, what we might be seeing is 1.5 billion people actually using Web3 technologies in some shape or another in the next couple of years. Now, another thing I would like to point out is this .com NASDAQ chart that you see on the right-hand side. The key point here is that in spite of the valuation of different types of assets, in spite of the volatility of markets, value has been there in the .com bubble as well. The drop that you see around 1999, 2000, in this period of time, there were companies like Amazon. Nobody would have today would doubt that these companies are actually providing substantial long-term value, right? These companies have been around, they went through market cycles, and regardless of how the asset prices have developed and the valuations have developed, adoption actually continued to increase. And this is exactly like looking at this technology, at this new digital infrastructure that is being built out. It's very, very important, and this is true, I would say, for corporates, but it's even more true for corporate VCs, to actually look at these topics regardless of how asset prices are developing. We need to look at the fundamentals of this technology, and they are not changing because of market cycles. Now, what makes it difficult and challenging to be involved at this intersection of corporate venture capital and corporate strategy? I would say the first big challenge that we're having definitely is the very negative market perception that crypto and Web3 has. A couple of years ago, you would hear people like Larry Fink, CEO of BlackRock, saying that basically none of their customers would actually be interested in holding these types of assets. It's a scam. It's basically the biggest robbery that we've seen for a very, very long time. This is kind of the general conviction and conception of this entire infrastructure. Now this is entirely changing right now. You see exactly those who condemned this technology actually embracing it. BlackRock is launching a new ETF, or intending to launch a new ETF on Bitcoin, a spot ETF. Many financial institutions are now applying this technology, so conviction is coming in. But nevertheless, if you look at how corporate decision makers operate in terms of innovation, of course they are influenced by what they read. And for a very long time, they would have only read bad things. And FTX got burst, you had the Terra Luna situation. So if this is what shapes the attention, then obviously it's very difficult to transport innovation with regards to Web3. And that is despite the fact that now, and we've just seen Lufthansa talking about this with Polygon, that actually wide-scale use cases by large customer-facing brands are applied and are actually being used. Second challenge, business models. Where are the concrete use cases? I think this is what this conference is kind of all about, right? You can claim that it's difficult to see concrete use cases that are already applied today by many, many millions or even billions of people. But then if you kind of zoom out and again look at the fundamentals, you have three very concrete use cases. You have Bitcoin as a store of value. You have ecosystems like Ethereum, which basically are decentralized app stores. And you have stable coins that completely change the way that value is transferred in the digital world. So these use cases alone are actually quite relevant. And then what you're also seeing is that this number is a couple of weeks old. According to Crunchbase, we have far more than 20,000 companies, innovators, startup in the Web3 space already, and that considering that Web3 really only has been a thing since kind of Ethereum came up, right? And last but not least, of course, you have some peculiarities when it comes to applying these types of technologies and engaging in this field. You need certain types of infrastructures, you need a certain type of understanding, and again, VC can actually help finding the right partners to apply these types of things, but then also understand why these things are actually needed. Now, I've spoken about some of the more general challenges that we're facing, but then also from a venture capital perspective, this entire thing is completely new. You would usually invest in equity. Now, in Web3, many of the projects don't even give out equity, they only give out tokens. And holding tokens, if you don't kind of understand the logic on how they increase or decrease in value, is something that is actually not easy to communicate to top management executives, because for them it's like holding thin air, right? So a lot of education is actually needed to kind of prepare them for this kind of transformation. Then, if you look at regulation, it's kind of developing while we're actually talking about this whole thing. Like, there's no week that none of the biggest countries in the world is actually announcing some new special laws or special circumstances for how crypto is actually going to be regulated in their respective countries. So it is something where you really need to be very quick on your feet and very closely observing how things are actually being built out and how they fit into the regulatory streams, because ultimately, if you're investing in a company, you're dependent on the regulation to be there in order for your investment to actually flourish, right? And then, of course, there's reputational risk, specifically when it comes to kind of founding teams that are not known, that are entirely new. You give them a lot of money and you hope that actually they are capable of making the right business decisions for you. But nevertheless, despite all of these things, VC is actually extremely helpful, because you can kind of allocate capital in a very risk-averse way, diversify your portfolio, and learn from the innovators on the ground. And this is exactly why we've come out with this new initiative, B3-THE HUB, in the midst of the bear market. In July, a couple of weeks ago, we basically said, look, we need a three-pillar conceptual approach at the intersection of venture capital and corporate strategy in order to actually make some sense of all these challenges and all the opportunities. And what we're doing is very simple. We apply three pillars. The first pillar is fund and selective direct investments, where we're working together with the leading innovators in the space, learn on how they are actually revolutionizing the way business is done in the digital realm. Then we take this knowledge, these insights, we kind of translate them into educational output. And this educational output then, in a structured way, is delivered to our top-level executives, so that we can actually create some fertile ground for innovation to actually happen. Because I just said, there's a bad reputation, and no real incentive has been there so far to actually look at this topic and actually try to understand it. And then last but not least, and this is kind of the ultimate vision that this hub has, we are taking these two pillars, the insights, the knowledge, the fertile environment, to identify which of the themes that we are seeing are actually going to have a lasting impact on how business models in Web3 are being operated and where the actual paradigm shifts of this technology are. And I mean, this is true for us as a large media and services enterprise, but the fact that we can actually deploy capital as a venture capitalist gives us the opportunity to kind of act very lean, very efficient, and then hopefully finding the right partners that are going to kind of define how we do business in the future, and how maybe the music industry or the content industry in general is monetizing and changing the way business is done. Thank you very much.
Thank you, Martin. Thank you very much.